Hey everybody, it's Stock Picks by Tim, and in this video here I'm excited to talk about 5 stocks that I absolutely love. A few of these I own, a few of these I don't own, but all of these I'm a fan of, and I think they'll do good over the long term. We're going to look at a big chip company, a little chip company, we're going to look at an EV startup, and also a massive corporation, starting with A and ending with N, and also my favorite EV charger. I'm sure you already know what that is. But if you like these videos, don't forget to like, subscribe, hit the notification bell. It definitely helps me out a lot. Check out the links down below for some free stocks and free cryptos. And let's take a look at these 5 stocks. If you couldn't guess, the company that starts with an A and ends with an N, it's none other than Amazon, AMZN. This company right now is sitting at $87. And I do not hold this company yet. This is actually my cousin's high conviction play. He absolutely loves this one, always tells me I should buy some. And you know, I've just been extremely patient. Of course, some of you know I just got into my new house, so I had to kind of free up some capital and haven't really been on the hunt for some new stocks lately, but I am keeping a close eye on this one. And I do plan on purchasing some of this very soon. Now, one thing you'll see here is we have kind of this descending resistance. You want to keep an eye on this, and you also want to keep an eye on this support level here. So it could come out any direction from here. If we do break 86, come down and break 85, we're definitely going to pull back a little bit more in my opinion. But regardless of that, I do think long term, Amazon's very attractive at its current price. And you'll see despite the current environment, you know, Amazon has still been doing okay. Their revenues have been increasing. But I think Wall Street's fear, or part of their fear, was they had a couple negative EPSs. Although according to TradingView, their last earnings per share was positive. Definitely a fan of Amazon for the long term. I love the company. And oh man, do I ever wish in the early 2000s I would have invested in them. I was definitely a fan of their products. I had Amazon shipping to my house every day it seemed. And I kicked myself for not investing in them. But I'm not going to make that same mistake again. Although, side note, of course, the gains will not be like they were back then. Now, next up, I did want to pull up Rivian. This is, I guess you could call it an EV startup still. I've seen a bunch of their trucks everywhere. They also have a contract with Amazon for delivery vans, and I've seen those as well being shipped to Amazon factories. And one thing you'll notice with Rivian is we have extremely exponential revenue growth. Just look at this December reported quarter here, 1 million. Next quarter, 54 million. Next quarter, 95 million. Next quarter, 364 million. And next up, 536 million. This company is growing revenue at an alarmingly fast pace, in a good way. And I do believe that they will catch up and get to where they're profitable in a matter of time. However, that could be quite a ways from here. But just based on how quickly their revenue is growing, makes me confident in a stock like Rivian. And just as a side note, they do have a decent balance sheet. They have about 11 billion in cash. And this is a $22-ish billion market cap company last I checked. And this is another stock I haven't picked up yet. I am keeping an eye on it. And funny enough, I believe Amazon does have a small stake in Rivian. So potentially by just buying Amazon, you would have a little bit of exposure to Rivian. But I do think this is a good standalone stock to consider DCAing into, even right here where it's at. I'm not very sure that we're going to see this come down under 20. I really wouldn't be surprised just with the current market. But you'll notice that this earnings, it dipped very hard. They had they did miss their revenue by quite a bit. They missed it by 30% just about. This could be why it dropped so much here. And it just so happens this is May 11. What have I told you guys in this channel? May 11 for a lot of stocks is the low that we've seen. And that's the case months from now still. Very interesting to think about. Next up, I did want to pull AMD stock up. I'm a firm believer in this one. I don't hold a position of this anymore, but I'm definitely keeping an eye on it. We are in a clear downtrend. You'll see this descending channel here that started since late 2021, just like the overall market. Been in a long downtrend. However, AMD to me looks like a fantastic company. You'll see relatively consistent revenue growth with this one here. Pretty consistent revenue growth. Not perfect, but relatively consistent. And now this company hit a low of $55. And if it does near there again, I would want to pick some up. I definitely believe in AMD for the long term. I actually love their products, by the way. I am recording this on a Ryzen 7 right now. And I'm definitely a believer in AMD. Their acquisition of Xilinx helps them out a lot here. And I think moving forwards, this is going to remain the company to beat. I think there's a better company than Intel. And in terms of computers, you get more bang for your buck in AMD. This is pretty common knowledge. And I really do believe in the company. I'm a huge fan of semiconductors. I believe, you know, everything needs chips. More and more technology brings more and more chips. And this is a solid, profitable company. So that's another thing to think about. But next up, let's look at ChargePoint. This is my picks and shovels EV play. I absolutely love this company. I'm a firm believer in ChargePoint. We have very, very consistent revenue growth, extremely consistent revenue growth. Last quarter reported 125 million. Quarter before that, 108. Quarter before that, 81 million. Quarter before that, 80. and it continues down. So we see consistent growth over time in revenue. You've got a company that has executives that have been there since the company's start. I think the CEO's a legend. He really believes in this company. You'll see that they're still expanding into Europe, still growing. Europe is a huge EV player. I would argue bigger than the US, at least per capita wise. And I'm a firm believer in ChargePoint, like I've said. Now this hasn't gone down to its May 11 low. It is kind of getting close. And just based on how the chart looks, it's definitely in a downtrend. Definitely looks like it could continue farther down. I'm not going to bet that this here is the bottom and it's just going to turn around. Of course it's possible, but that's going against the grain. My assumption would be that we're going to continue down a little farther. One thing to look out though for that I'm kind of just noticing here now, I would watch this trend. It does look like we're kind of in this falling wedge. We're going to tighten up a little bit and we may see a breakout here soon. Keep an eye on that pattern. But overall, long-term believer in ChargePoint, I do hold a position in this one. And next up, I want to talk about one of my highest conviction stocks out there. I absolutely love this company. This is another semiconductor company. It is a smaller chip company, and this is going to be Indie Semiconductor, INDI stock. I highly recommend, if you're going to look into any of these, look into Indie. Amazing team of executives. They've sold a successful company to Skyworks back in the day. They all have experience with companies like Broadcom, Skyworks, Motorola. There is a long list of companies that these execs have been working under, you know, and they all have a lot of experience together. So I believe in the executive team here. And one thing you'll see with Indie, extremely consistent revenue growth. I absolutely love it. Last quarter was 30 million. And considering that around a year ago, this company was pulling in less than 10 million, is extremely, impressive to me. I absolutely love this one. And one thing that executives have said is they do expect to reach profitability, I believe, towards the end of 2023. When Wall Street finds that out, or when Wall Street realizes that, I think they're going to pile in. I absolutely love this space that they're in. The semiconductor industry, specifically autos, has a very, very large compound annual growth rate, somewhere in the 50-something% range. And you'll notice cars, that are available now coming with more and more chips, thousands of dollars worth of chips. And there's a huge change compared to how cars were, with roll-up windows, no heated seats, things of that nature. All those things need chips. And of course, as these EVs get more autonomous, we get the ADAS, or advanced driving assistance systems. Those things will bring more chips into cars, and India is at the forefront of that. They actually supply chips to the likes of Rivian. They supply chips to NIO. They have a long list of chips they supply to almost all the manufacturers. I'm telling you right now, you do not want to sleep on Indie. And one thing that I've been liking to do with this company here is I like buying the warrants, because for me, it's a very low, money you got to put in. The warrants are somewhere around $2, probably less right now. But look at it like this. If you believe Indie is going to be higher than $13 by 2026, I would want to buy some warrants. Now, when you think about the warrants, you do have to execute the warrants, and it has a strike price, I believe, of $11.50. So you add that $11.50 per share plus the cost of that warrant, and that will be your overall investment price. So as long as Indie by 2026 is over that investment price, there's a profit there. And I very, very much so believe that Indie is going to be well above, $13 in 2026. This is a long time from now. A lot can change by then. And I personally think we will be quite impressed with Indie on the long term. Now, one thing you'll see with this company is since May 11, it has been on an uptrend, funny enough. It does look like it's starting to break this trend. I could just have this in the wrong spot. This could be kind of a false breakout here. And it could be a new, a new bounce off of a support. So keep an eye on this. If we keep pulling back, specifically if we break this 650, that wouldn't be a good sign. That would be a new lower low, and we may fall further. But in reality, I love Indie for the long term, and this remains a very high conviction play for me. But thanks so much for watching, guys. Which of these 5 stocks are you most interested in? Let me know down below in the comments. I'm definitely a believer in all 5 of these, although I'm not invested in all of them. Thanks so much for watching, guys. Hope you enjoy the rest of your day, and take it easy.